Hey guys, so welcome back to my channel, and in this one we're going to be getting into a step-by-step guide into supply and demand. Now this is something that's very relatable to smart money concepts. In my opinion, smart money concepts, supply and demand, pretty much the same type of thing. Honestly, it's come to a point where even when you look online, people are just naming it different things. But when you look at the core concepts, all the things are pretty much quite similar. So before we get into everything, obviously I'm going to be going through a checklist, pretty much how we actually identify supply and demand errors, and then also how we actually get into them as well. So definitely stay tuned for that. Before we get into anything, guys, please, these are all just comprehensive and free lessons for you guys. So all I ask, hit that like button, hit that subscribe button. I'm going to be bringing a lot more content for you guys. But yeah, let's get straight into it. Now, in terms of supply zones, what is the actual technical definition, and then what is that simple definition? So technically, it's an area where supply exceeds demand, and therefore price starts to drop off. When we relate this to real life as well, what happens if you're selling something? You've got a bunch of stock and you've got too much stock and not enough demand. What's going to happen? Eventually, you're going to have to reduce your prices. It's exactly the same type of thing here as well. Pretty much in these premium areas, what tends to happen, we might get a bit of consolidation or something like that, where eventually price breaks structure completely downwards and then sells off. These are the areas that we're going to be waiting for. So it's that last up move before the significant breakdown, and this is how we define the supply zone. Again, when it comes to demand zone as well, similar type of situation, obviously, except we're going to be looking in the opposite direction. So very, very simple definitions. But yeah, is supply and demand as simple as that though? Now, when we look at a market, and this is pretty much just a screenshot of a random chart, it's never as simple as that, because you're going, and the problem that a lot of beginners find with smart money concepts and supply and demand theories is you've got so many areas to actually look at, right? So how are we going to define which areas we are going to look at and how we actually enter them as well? So that's the main issue that we do find, with beginners, especially when, for example, when they do enter my mentorship. It's something that I get asked quite a lot. How do we identify the better supply and demand areas? Now, what you need for this is a checklist, step by step, looking into, first of all, how we actually identify supply and demand zones, and then secondly, how we actually enter these positions. Because of course, you can have the best checklist in the world, you might be so well prepared for all these positions, but when you actually get into the grits of it and you want to actually enter positions, if we're not entering them, we're not making money out of the forex market. So these are the main things we're going to look at, and firstly, it's going to be identifying supply and demand areas. Now, for me personally, the first thing that I always look at is that high time frame market direction. Now, what I define this as is that market structure. So pretty much we're going to be identifying on the high time frames, are we showing bullish or are we showing bearish intent? Now, secondly, we're going to be waiting on more premium or discounted price, obviously depending on which direction we are looking at. Now, don't look for supply and demand areas that are anywhere below or within that 61.8% fib retracement. The reason I mention this is pretty much 61.8% fib retracement. It just defines what's going to be premium and what's going to be discounted as well. Anything around the 50% or even less than that, personally, I'm not going to be looking at it. Obviously, there are scenarios where it's a bit more complex. I'm going to get into all of that, but pretty much just look for premium and discounted price. Now, thirdly, does the supply and demand zone look clean? And we're going to be getting into examples of how we actually identify this as well. But the main thing is this: has it created a significant push away from the zone? And also, has it left an imbalance? Now, generally, the better supply and demand zones are going to be areas where it's actually broken structure. So that supply and demand zone that's had that push is broken some kind of market structure, and now we're pulled back to it. That's the main area that we're going to be looking at. And then finally, we can now start to look to enter. So either an entry limit or a confirmation entry. So pretty much here are some, very, very simple 4 steps that we can look at into the markets. And of course, the best way to actually implement this is to look at some live examples. So what we're going to be doing is we're going to be getting into GBP USD on the 1 hour chart. Now, generally, what I would do with this is this: when we get into the market, when we're looking at our supply and demand areas on the high time frame, personally, I think a great starting zone is a 4 hour zone, in terms of looking at market structure, in terms of looking at high time frame liquidity. But pretty much when we're actually selecting our zones, personally, I think around a 2-hour zone or a 1-hour zone is perfect. So for now, what we're going to do, we're just going to get into the 2-hour zone for this. Now, let's look at this scenario right here. Let's just pretty much describe what's happened. Now, we've been in this bearish trend for quite a while, but as soon as fundamentals, and that's the main reason why this has actually started to flip completely, never forget that the main market mover is going to be fundamentals. But of course, with this tutorial, we're just looking at supply and demand zones. So as we can see, what's actually started to happen is we've broken market structure to the upside. So as soon as we got this significant break of structure up here, as you can see, this was the last high before the last sort of move to the downside. This was completely broken. As soon as we get that, now we can understand that with this zone right here, we've actually started to push market structure to the upside. So we could say that we are looking bullish. Now, once we get this, what are we going to aim for? And I'm going to break this down in every single scenario. Let's actually push it down here. Once we get this breaker structure upwards, what do we start to look for? Now, as I said, we are always going to be looking for premium or discounted areas. Now, if we stuck a fib on this, I'm going to have to reset my chart. So you know what? We already know where the discounted areas are going to be. Pretty much is going to be 50% of that, 61.8% of that zone or any lower. So if I was looking for any pullbacks to any order blocks, the areas that I would be waiting for would be, first of all, this supply zone right here. And then I could potentially even argue down here as well. The reason I wouldn't consider the bottom one is because it's been mitigated. Obviously, that's a lesson that I've talked about in other YouTube videos. But for now, we're going to be waiting on these areas. Now, personally, what defines these as good areas is, first of all, it's that last push down before the up move, as you can see. And then also, it's created that imbalance just above as well. So this is what I would say is a very, very high quality demand zone. So if we continue price, as you can see, in this particular example, price didn't get to our area. So you know what? Let's just continue and see what happens. As you can see, price didn't fully touch our demand zone, but instead it just filled the imbalance. So okay, even with this knowledge right now, what's actually happened? As soon as we fill this imbalance, price is now broken further structure on the lower time frame over here. So as you can see, what we're going to be waiting for is for our next demand zone. So as you can see, once we had that break up, personally, if I'm looking for buy zones, I'm going to be waiting on something like over here. Or potential. So let's just forget about these zones right now, because we're now sort of in this next wave of price. Going to be waiting for either that zone or that zone right there. And as you can see, actually, let me see if I can speed this up a bit. Price eventually, after all that movement over there, is going to push upwards. So as you can see, price eventually pushes into this discounted zone right here, and then eventually we get that next push up. Again, with this next push up right here, we've broken continued structure to the upside. So again, what are we going to be waiting for? Now, if I was looking at this price right here, and we were at this zone right here, now we've got a few potential areas that we could look towards. So obviously with this, we've mitigated it already. So this area should hold up quite nicely already. Now, if we're looking for potential buy zones right here, you've got 3 areas that you can look at. The first zone would be right here for continued buys, up top. As you can see, this area right here, again, what's important about this is we've got that imbalance that's just been created afterwards. And then also you can argue down here as well. So for me personally, if I was looking at these 3 potential areas, this first area would be completely invalid for me, just because it's so close to price and we want a bit more of a discounted area. So it's very, very simple, guys. When you are looking for supply and demand zones, stick to that checklist that we've just talked about. You are looking for that high time frame market direction. What did we see here? We saw bullish intent. Okay, so now we know we're only going to be looking for demand zones. Again, what's our next point? Wait on more premium or discounted price. Again, with this scenario right here, because we know we are looking for buys, we're going to be waiting for more discounted prices. So for me personally, I would only consider a demand zone here, or potentially down here as well. Of course, the more discounted you go, the more of a quality setup it is. But that's not going to happen in the market every single time. Hence why we are going to get into our entry requirements. Again, does our supply or demand zone look very, very clean? Of course, if we do look at these scenarios right here, is these areas that have created that push up, and then pretty much we've got the imbalance that has just been produced afterwards as well. And now our final step, can we actually start to look to enter? And that's the main thing that we're going to be looking at next. So the second part of supply and demand zones, of course, is actually how we're going to enter our positions. Now, if I was to define this in two options, our first one is this. If you are waiting for your high time frame supply or demand zones, you could simply enter just as a limit. So it could be, for example, on the 1 hour chart, you just set your limit right there and then let price do its thing. Or potentially, as a second option, look for our confirmation entry. Now, as we know, we've got these main two options. Now we have to weigh up both the pros and the cons. And honestly, it just depends on what type of trader you are. Now, for me personally, obviously, having the time that I have available, you need to think about your daily life as well. Are you going to be able to set out the charts, pretty much every day, just active, looking for these confirmation entries? Or are you just going to be able to pretty much set your limits and let price do its thing? Now, that's the thing. When we look at the limit entries, of course, generally we're going to get a lower risk to reward. And then the benefit of this is rarely we'll miss entries, because, the problem that we find with confirmation entries is you might be too particular in terms of your lower time frame entries. You might wait for that point of interest on the higher time frame, and then eventually, just sticking down to the 15-minute chart, the 5-minute, the 1 minute, you might even miss entries. So this is one thing that you obviously are going to have to balance up. Am I going to stick to the higher time frame? Am I going to stick to the lower time frame? Ultimately, that's a decision that you are going to take. For me personally, I stick to more of these confirmation entries, obviously with the whole idea of supply and demand in mind. But of course, you've got more confirmations that come into that as well. Now, in terms of if you are sticking to that confirmation entry, this is pretty much the step-by-step guide that I think you should take, generally as your sort of base checklist. And then, of course, you can build upon this once your plan is more intact. But that first step is always waiting for that point of interest to hit. One thing that I do find with traders that I'll get into supply and demand as well, especially if you're waiting on them lower time frame entries, what I would advise is definitely wait for your high time frame point of entries to hit. Because if you are looking for lower time frame entries at any point, you haven't got that backing of that point of interest on the high time frame. So you want your entry to be as safe as possible. So yeah, in terms of the high time frame point of interest, obviously we're pretty much going to be doing everything that we've done up until now. Once you've got these identified, we're now moving on to the lower time frames. So now we're going to be waiting for that 15-minute change of character. Now this is probably a term that you've heard of if you're in the smart money concept field, but pretty much you're going to be waiting for a break past that structural point that pretty much pushed us into the point of interest. And we're going to get into a few examples pretty much talking about this in more detail, but waiting for that change of character on the 15-minute time frame is very, very key. Now thirdly, once we get that change of character, we're pretty much going to be waiting on an entry at an order block. Now there are a few variations of this, and I have talked about this in some of my other YouTube videos, but just as a general baseline sort of checklist that we are going to look for, take your entries at that order block that created the push up past the market structural point. Now this is going to be the most significant areas. Why is this going to be? Because this order block is pretty much the reason why we got that push up. Again, you could call it an order block, you could call it a supply demand area. It really doesn't matter as long as you can identify it on the markets. But yeah, remember guys, for more success, obviously you need to add more confirmations that go hand in hand with all of this confirmation entry guide. But yeah, these are going to be the 3 simple steps that we're going to look at. Now, in terms of what this actually does look at in terms of a visual point of view as well, generally, this is the type of setup that we're going to be looking at. So of course, we've got a high time frame point of interest marked up. So we've got that first mitigation over here, a break above this market structural point right here. So of course, the reason I've added this is just so we know that we're still moving bullish. Now, in terms of price and how we actually do enter them, like I said, we wait for that 1 hour point of interest. We wait for the 15-minute change of character. And as soon as we get that, now we have that bullish intent. We've got that confirmation that yes, we are going to be looking for buys now. And then pretty much we're going to be waiting for that pullback to that order block. Now, one thing I would say with this is obviously there are a few variations. In this example, we are going to be looking at the order block. There's going to be many times where we do enter the imbalance, but for this scenario, we're going to be looking at the order block. So just looking at how this looks like in the market as well, pretty much exactly the same thing. We've got that bullish intent. We've got that pullback down to the 1 hour point of interest, and now we're going to be looking for buys. Of course, the best type of confirmations of this is you want at every single point your market structure to be showing bullish intent. Again, with this one as well, it would have been very, very nice if, for example, we got the push up before we got the pullback. But again, that's just an added confirmation. So yeah, please note this is the standard change of character entry model. There are more advanced and intricate confirmation entry models, but for the purpose of this lesson, that's something that we're just going to be exploring. Now again, what better way to describe this than looking at more case studies. So again, we're going to be looking at GBP USD on the higher time frame first, and then moving down to our 15-minute charts. So in terms of where we're going to be looking at for now, let's just push back price back to where we were looking at. So where was it over here? Obviously, this is one of the charts that I'm looking at quite often. So let's just go over here. Now, with the 1 hour points of interest, as you can see, we've now broken structure at many points upwards. Fundamentals were very, very aggressive to the upside. So what we've decided to do, of course, is look more of our closer price action right here. Of course, what would be very, very nice is if we just waited for price to pretty much pull back down to these areas. But one thing you do need to understand, and something that I definitely go through in my mentorship, is with the power fundamentals, when it's very, very aggressive in one direction, when a pair, for example, like GBP USD, the pound has been moving very, very bullish, and the US dollar has been moving a lot weaker, we can only expect more aggressive price action to the upside. So when this does happen, we have to take certain measures, to be honest. We wait for that 1 hour point of interest. If we get that confirmation that we are looking at, that's when we're going to be entering. So as you can see, guys, pretty much on the 1 hour chart, what we were looking for is that mitigation of the high time frame point of interest. So as soon as we got that to that demand zone right there, all we're going to be waiting for is that 15-minute. Let's just break down to this area right here. We're going to be waiting on that 15-minute change of character upwards. So personally, what I would define that as is this one right here. The reason is this, because as soon as we got to this market structural point right here, this was the last pretty much up move that we got into the down move into the area. So this is the main thing that I would look at. You always need to pretty much identify which area was the last one that caused that push into the point of interest. So as soon as we got that point of interest right here being hit, so this is demand zone on the 15-minute even, we got that change of character to the upside, and as you can see, what caused this massive imbalance, it was this demand zone right here. So if you really wanted to and play in just on the 15-minute chart, you could just define this and put the order block right there. But personally, I would go for more of a relaxed approach, and then obviously if we are looking at potential take profits, we are potentially looking for price to continue upwards, following market structure to the upside. Of course, we've got the backing of our fundamentals that help in this direction. But yeah, pretty much this is what we're going to be looking at. And again, this type of scenario is so replicable. Even just looking at something like this as well, even on that last scenario, we waited for that demand zone on the 1 hour. We got that change of character to the upside. Again, with this one as well, on the 15-minute chart, we got that push upwards, a closure above the zone, and then a pullback down to one of these low time frame demand zones. So if you were looking on the 5-minute, for example, this is a type of position that you could have got in. So yeah, guys, very simple. Stick to these checklists. The first one that I talked about, identifying your high time frame supply and demand areas. Once you've got this in lock, you've identified it on the 1 hour. Now we can start to actually look for our confirmations on the lower time frame. So yeah, guys, that's going to be it from me. Hope this was very helpful. Pretty much just defining it two very, very simple checklists. But yeah, in terms of going into it a lot more detail, for those of you that are interested, of course, I've got my whole mentorship and Discord. Now we're at a point where there's over 1,200 students, and the amount of success that you can see, you've got it all over on my Instagram story. So definitely, guys, if you are interested, all the links are in my description. But yeah, guys, that's going to be it from me. Take care, and I'll see you all in the next one.